Okay, this is week 2, the video A, starting and building a nonprofit organization. The objectives for this week's discussion is to discuss and demonstrate the best legal structure for a nonprofit organization and discuss how to avoid violating legal restrictions for nonprofit organizations. The material is Chapter 1 from the NOLO publication, Starting and Building a Nonprofit. What does it mean when we say an organization is a nonprofit? Well, it does not mean that the organization cannot make a profit. We discussed this before. What it means is that the organization must use all of the money that it gets for the purpose of the organization. There is no private inurement. We'll talk more about that on the next video, but it's important. There is no private inurement. There is no benefit going to a private party. The nonprofit designation comes from the IRC code, the Internal Revenue Code, section 501. And when an organization qualifies under 501c, the most common exemption, it does not owe income tax on its income. 501c3 is the category of charities, education, and religious. The exception is for the income is related to income tax, UBIT, which we'll be discussing next week. A nonprofit is taxed on its UBIT, but not on any of its other income. It also looks at the types of legal forms a corporation. It can be a corporation, an LLC, a partnership, or some other legal form that a nonprofit can use while it is doing business. Before we go into the nonprofit, I want to make sure we cover just the basic legal forms of all types of businesses first. You have sole proprietorship. That is a one owner, no formal formation. The person owns the business. They start selling. It's their business. They make all the decisions. They pay the taxes. A partnership is two or more individuals that agree to work a business together. You have two types of partnerships: a general partnership, where all the individuals are general partners with full liability, and you have a limited partnership, where at least one individual is a limited partner that has limited liability, and another partner has to be at least a general partner with unlimited liability. You can have more than two, but at least you have to have at least one limited and one general for a limited partnership. A limited liability company, an LLC, these are two or more individuals that form a limited liability company that doesn't have shareholders, it has members. It's a hybrid between a partnership and a corporation. It gives the people the security for liability of a corporation, limited liability, but the tax goes to the individual members like with a partnership. Then you have a corporation, the standard state-formed legal entity, often called a C corporation or a regular corporation, and it's treated like a person. It pays its own taxes, but the owners, the shareholders, have limited liability. Their only liability is the amount of their money invested. And then you have a nonprofit corporation. This is a state-formed organization that has an IRS tax-exempt status. So there's two main considerations when you're looking to form a company. That's personal liability. Does the legal structure protect the individual? And tax consequences. Does the entity pay taxes? Do the members or shareholders or partners pay taxes? This chart talks about the different types of entities, what their description, the liability, and the taxation. That's also shown in the material. The Chapter 1 is structuring a nonprofit legal form. The nonprofit is a state-formed entity. There are no federal corporations. So you go in and you form the corporation, and then you go to the IRS and you get a exemption of tax. You get the 501c3 exemption. Nonprofits are owned by members. Not owned, but they're operated by members, board of directors, and remember, you may have a nonprofit corporation with only the board and not any separate members. The owners of a corporation are not liable for the actions of the corporation. It's limited liability. and the same thing for LLCs. And the actual business of the corporation is run by the officers on the day-to-day basis. Should you incorporate? Basically we start talking about nonprofits and everyone thinks of a nonprofit as a nonprofit corporation. However, you do not have to organize yourself as a corporation. You can operate in a non-incorporated format and still get some of the tax benefits. So there's no need to incorporate to obtain the tax exempt status so long as you're following the tax rules. So why would you incorporate? Well, one of the biggest reasons is it gives the members or the board a non-liability. The corporation protects them from liability. However, the other big reason for forming a 501c3 nonprofit corporation is that by having the IRS classification of a nonprofit, that validates the fact that the company is doing nonprofit activities. Very few foundations, grants, or even donors are reluctant to donate unless the company is a 501c3 corporation. So those are the two reasons that it's best to go ahead and incorporate. One of the most compelling reasons to incorporate is to protect from personal liability, but the protection from liability is not absolute. Officers, if the officers don't treat it like a corporation, the courts will not either. Also, if there's extreme mismanagement or personal self-dealing, the courts will pierce the corporate veil and hold the individuals liable. There is a Uniform Unincorporated Nonprofit Association Act. This is to encourage involvement in small community groups that are not incorporated. Individuals that work for an unincorporated nonprofit won't be liable for the actions of that under this Nonprofit Association Act. The Act does not protect an individual from their own actions, of course. Federal Volunteer Protection Act, the VPA, gives a limited immunity to unpaid volunteers in case they do something negligent or careless. But as a volunteer, they are protected. In order to get this protection, the organization must be a 501c3 status or operated for public benefit for charitable purposes. The VPA protects the volunteers, not the nonprofit corporation itself. The biggest advantage of a nonprofit is the tax-exempt status. Nonprofit organization is exempt from paying taxes on its income, except for UBIT, which we'll talk about next week. Many states also provide tax exemption for general sales tax and property taxes as well for qualified nonprofit companies. And for qualified 501c3 companies, their donors may deduct their donations from their income tax as well. Nonprofits must file a tax return. It's a Form 990. Even if they're not paying taxes, it does show what the nonprofit is doing and how its revenues are generated. The IRS looks at 5 criteria to allow a company to remain its tax-exempt status. It must be organized exclusively for exempt purposes. It must be operated primarily for exempt purposes. It allows some other things to happen, but the primary purpose must be the religious, charitable, or educational or other approved purposes as found in the IRC. It must refrain from inurement. That is a big no-no. If individuals are taking money out of the nonprofit, the IRS will dissolve the nonprofit status, and that has dire consequences, which we'll talk about later. It must avoid electioneering. We'll talk about that later. And it may not engage in substantial lobbying. It may do some lobbying, but not substantial. The IRS website contains excellent materials to guide one through these complex rules. So in conclusion, there are many different legal structures that a nonprofit may take. It does not have to be a corporation. They all originate from state laws and from the state authority, and then they get their non-tax status from complying with the Internal Revenue Code, Section 501C, etc. The federal government only gets involved when the organization is seeking a tax-exempt status. However, that status carries a lot of weight in the marketplace and will impact the ability to get grants and donations. So that's all for this, and we will have one other video on forming nonprofit corporations.